Hello and welcome to DisruptX, a virtual talk series conceptualized by Masonica. Today's episode is very special for us as DisruptX turns 1 today. It was exactly a year ago that we started this platform to tackle interesting and insightful discussions and conversations on how technology is positively disrupting almost every industry. I would like to thank all our speakers who have joined us. They made such interesting comments, such insightful views they've shared with us. Thank you so much to all our speakers and our viewers for watching the show. You've been such a huge part of our journey. Do continue to be part of the dialogue. On that note, continuing with our Impact series that focuses on how technology is being leveraged to create an agile, inclusive, and sustainable world for the future generations. Today's episode is going to focus on the state of fintech in the MENA region. In this episode, we are going to discuss factors driving the fintech landscape, technology redefining fintech, as well as regulatory state of the countries, different countries where fintech startups are coming up. We'll also bring to you very interesting insights from how collaborations are happening. So without further ado, let me now welcome our speakers for today. Arvind Krishnamurthy, Vice President, Global Product Owner at Emirates NBD, and Padmini Gupta, co-founder and CEO of fintech startup Xare. A very warm welcome to DisruptX, Padmini and Arvind. I'm so glad to have you on today's show. We chose fintech very deliberately for our Impact series this month because a lot is happening. There's a lot of interest and there's a lot of factors driving the growth of fintech as there's been this significant rise in demand for contactless and safe financial services, be that mobile payments, digital wallets, online fund transfer, and so much more. So much that the market is actually going to surpass the 3.5 billion mark actually. And at that, I'm going to take as my starting point with the two of you. If I can bring you on first, Padmini, if you could please share some views on the state of the fintech industry. Why do you think, and what are those factors fueling growth for the industry?
The region actually came late to the sort of fintech scene. The first significant regulatory framework actually was in January 2017, and that's when the Central Bank of the UAE started launching their new licensing program for digital payment services. And then you started really seeing the market booming, right? So why is this market really sort of gaining steam? It's because there's an ecosystem here that's conducive to alternative finance. You could see that with the arrival of crypto here. A government that's actually at the center of efforts to drive innovation. And this ecosystem, because of where it's located and the openness to having international visitors, it's actually attracting a lot of international talent as well as international companies. And that's actually stimulating innovation in itself.
Sure. I'm so glad you bring up the fact that this fintech industry, and the fact that the regulatory framework was only established around about 5 years ago. Now, that also opens up a lot of untapped opportunities. On top of my mind is actually cross-border transactions, remittance that individuals make that accounts for a huge chunk of what can be facilitated and how it can be made affordable. But do you see a lot of barriers to entry as well?
Of course, the price of starting a business can be really expensive. So that's one. It's still a new market. That's another. What else? it's a smaller talent pool just because, population's small, right? So a smaller talent pool, but, having the ability to attract international talent as well as to go remote when you're hiring talent gives you a big plus because you're in the middle of multiple time zones. And then, there's certainty around more certainty around regulation, but you can also see that it's relatively new around partnerships with financial institutions. So as those succeed, then you'll see more fintechs being built in partnerships with financial institutions.
Fabulous. I'm going to take that as my starting point for Arvind. Uh, there was a point when it was fintechs were being viewed with a certain amount of threat to the banking industry. And there was much speculations that bigger banks, major banks, will sort of try to acquire fintechs with high growth potential. But what we see is a complete difference in scenario. We see there's a genuine urge to collaborate with fintechs to fill up certain gaps in the financial sector. How do you see that as an opportunity to service your existing and potential clients?
Okay, yeah, thank you very much. That's a good question to begin with. I think the point number one is that the so-called thought process that banks and fintechs were at war at loggerheads. I think that got sorted out much earlier in the journey, saying that it's a question of collaborative approach which we need to take rather than go against each other, because both of them serve a specific purpose in the industry itself. So if I take an example of a fintech, say an accounting system, right? So they also provide financial services in terms of managing somebody's books. Now, typically, there would be a bank that will have its own transaction piece, and then there would be these softwares, the accounting softwares which would be there, and they need to sort of key in everything, do the entry twice. But with the advent of fintechs and the collaborative approach of the banks now and the accounting software, they sort of talk to each other, right? So that gives a big value to the customer who's there. And I'm specifically talking more from an SME perspective or from the large corporates perspective, the entities which are there. So it brings about a lot of values when we collaborate and operate. And at the end of the day, is the customer who's happier, and hence he gets sort of retained. So that's one of the key things which is there. It's more of a collaborative approach rather than a disruptive approach, which earlier was the thought process.
And I'm so glad you brought up SMEs, because at this point, I mean, at least this data has some relevance today. The rejection rate for SME lending is pretty high in the region. I'm not going to quote any numbers, but I believe that such collaborations will only lead to better and a more smoother process when it comes to SMEs, because they account for a large portion of GDP right now.
No, I was saying that the SME business are the foundation for any organization in terms of GDPs, right? Because they enable trade, they enable all the businesses, and the uplift of a country. It's not just the salary segment; is primarily the SMEs, which are large in numbers but small values, but large in number, which are there. So they sort of help the economy grow, bring in opportunities of employment, bring in opportunities of cross-border transactions. So yeah, so they are the most important pillar in terms of the growth of a GDP of a country.
Sure, and I'll take that as my starting point for the next segment, which is financial inclusion. Another very important subject. We've seen that different, and it is only normal, different countries in the MENA region are at different levels when it comes to financial inclusion. Obviously, the UAE is actually leading that race, with Bahrain and Saudi Arabia following. Whereas we see certain countries like Egypt, Algeria, and Morocco lagging behind a little bit. So Arvind, if you could help us understand how are banks leveraging innovative solutions, technology solutions to sort of make way for safer and secure financial inclusion?
To sort of begin with, an SME, will require funds to operate his business. And when you're looking for funds, he's obviously looking for certain loans, right? And as you rightly mentioned earlier, getting a loan in this region is difficult, primarily because it's more of a transient population. So the cost of funds are much higher from that perspective, right? But I think the center of it is the government, which is helping us to set across the right kind of credit bureaus where you can get a quick view as to what is the health of the organization or the company where you want to lend, uh, and of course the other supporting setups which they do to help SME foster in this country, right? Make it easier for them to do business, easier for them to set up their companies, and that recently we transformed from an ownership perspective. Now anybody can own 100% business, so that making a lot more easier, removing a lot more barriers. Now from the tech front, uh, uh, again it's the collaborative approach where for which this country is very open for banks to integrate with the fintechs. The government is itself is providing lots of services which will help bank identify and authenticate the customers to whom it is lending from the various databases which they have, right? So let's take an example of when you go out to the from the airport, you just look at the facial recognition and then you are out of the country, right? So that's the your entry and exit. So government is sort of is leveraging on that capability and extending it to the banks to use the same service where you get authenticated the customer. You authenticate the customer saying whether he's the right customer or wrong customer, right? Is genuine or not, or whether it's a fraud or not. So which helps us sort of reduce lower the risk, which will make the funds a lot more cheaper. So initiatives like this, where the government is at the center of it and helping the banks and the fintechs to sort of use these services in order to make it much more seamless, is on the run, and UA is definitely on the forefront of this. You also briefly mentioned about other markets. Bahrain, yes, in the payment space, they are ahead, but UAE is still yet to catch up to that level of the payment space. If you look at non-GCC countries like India, China, or US, the payments are very seamless. It's on a click of a button where the payment transactions can happen. UA is getting there. There is a drive initiative to have more instant payments, which will help us fast track the trade transaction. It will help us fast track, the payments which come into each other's account. So which will again help on the recovery front as well for the banks and the customers themselves.
Absolutely, I couldn't agree more. A lot has also happened on the peer-to-peer, financing side of things.
Yeah, peer to peer is more where you sort of have a deep integration with the corporates. For example, if you look at the larger corporates like Alpha Thames or any of the Carrefour and those things, they are directly integrated into the banking system, right? Because they cannot afford to have a payment to be made in mass to go through the manual process. So the banks and these large corporates are integrating directly with their ERP and the payment systems which they have, the billing systems which they have, so that the transactions can be seamless, faster, and of course there is a complete track from an audit point of view, saying that yes, the transactions can be reconciled and we know exactly which vendor has made a payment or which supplier has is yet to make the payment. So that sort of helps the peer to peer at an entity level, and of course, at the individual level, you have simple things like a mobile-based payment. I can send money to another mobile number straight away, and the amount gets credited more or less instantly. So that's again on the rise. But what we need to see is more of instant payment, which is integrated, say, into a WhatsApp, or where for example, it would be a Paytm in India, where merchants are just receiving the money based on the QR code. So that level of integration is yet to come, but that is something which is being worked on a fast track as far as the banking and the central bank infrastructure is concerned.
Certainly, a lot of development already under the way. Padmini, a lot of developments happening, of course, yet we have a significantly large unbanked population. By that I mean this population does not have access to traditional banking accounts. A lot of things are changing with the rise of fintech startups like yours. That's birthed to life literally to solve a problem, to bank the unbanked. How do you see this space developing, and how are you building sustainable and profitable business models while keeping that social impact side alive?
So I look at this problem as a financial inclusion problem, right? And so let's sort of define what financial inclusion is. It started about how some sections of society didn't have access to bank accounts. But now it's actually come to mean a much wider range of services, ranging from financial literacy to credit to insurance. In 2020 essentially has completely changed consumption habits and digitized financial services at a completely unprecedented pace. Um, More transactions are happening digitally and online. So financial inclusion itself, which includes the unbanked or underbanked, has to evolve to cater to the new needs of the masses in this digital era, right? It's no longer good enough to say, okay, you have a bank account. You also need to have the ability to transact online. It's no longer good enough to say, let's have state-sponsored credit schemes. It's important to have access to credit online. It's no longer enough to say, let's have state-sponsored deposit schemes. In an era of negative interest rates, it's critical to have this to allow people to invest and plan for their futures online. So essentially, financial inclusion itself has to be able to evolve itself to allow anyone, anywhere to participate fully in that digital economy, to be able to create, to save, to invest, to borrow, to grow. And this is really important in the MENAP region, where less than 1 in 6 adults have access to bank accounts, and 85% of all transactions are cash-based. And that sort of mirrors our story. So we actually started RISE with this view to help migrants better manage their finances. Our initial product was bank accounts, because without one, it's not possible to do anything. And we very quickly realized that we need a whole stack of financial products to bring to migrants, to bring them into the financial fold. So we started with a financial health check, which gave them a view into the state of their finances in 30 seconds using a fun and engaging chatbot. We included insurance through bespoke insurance through AXA, our partner, to help migrants better protect themselves and their future finances of their families. We also launched unique cross-border buy now, pay later services, allowing migrants to purchase products for their families back home. And then we did that with our latest product, Xare, which actually rose from the insights and the problems we saw during COVID, the digitization, the need for digitization of cash. And So the problem we saw most was on something that you've mentioned before, which is how problematic remittances were during COVID. See, during COVID, when people were sending money, even if the sender had a bank account, the receiver may not have. So all that money got cashed out and had to be spent, and people weren't actually able to spend cash during COVID, right? So imagine the issues around remittances. And so we built Share to allow people to share their access to their debit or credit cards with their families back home without sending cash, effectively allowing them that transaction to happen online and allowing them and their families to become part of this digital economy.
True.
So when Share began, we realized that migrants were a specific use case because they were sending money back home for their families. But what we also realized with the growth of Share is that this is actually how friends and families operate in at any time, right? Being able to share money. So it's actually grown locally, right, within a country as well as cross-border globally.
That's amazing. And very quickly, can you share any growth percentage from the time you rebranded to Share to now?
Oh, that number was it like 50,000%. It's an amazing number. Just this year alone, it's been like 15x. So we started around, I'd say 1.5 years ago. We launched Share.
That was lovely insights, Padmini. Thank you for sharing this on the show, and happy about the kind of progress that Share is making. We're going to come back with more insightful segments on funding and the future of fintech, but after this short break. Don't go too far. Welcome back. We're still on the impact series of DisruptX, and we are discussing the future of fintech in the MENA region. Starting this segment with funding. We've seen fintechs get access to large amount of funding. So to quote some data, the region alone raised about $1 billion of funding in 2021. And the growth momentum is going to continue. It's expected that 800 fintech firms are expected to raise around $2 billion in VC funding by end of this year. I'm going to start with you, Padmini. How do you see access to funding and investments catalyzing those major changes for the fintech landscape in the region?
We've already seen that the growth rate of fintech in the region is around 30% and growing, right? That percentage is also growing. And then there's been a substantial amount of funding just this year alone. And that, I want to go back to actually a basic, right? So what is the basic? This world the Bank actually comes from the World Banca, which means bench. The thing that people would sit on and the way people would sit across each other and help each other in times of need. And sometimes we forget that when it comes to complex regulations, complex financial products, branches that have become really overwhelming to even walk into sometimes, right? Because they're giant institutions. And this region, with the growth of fintech, with the increase in funding of fintech, is actually on the cusp of a fintech Cambrian explosion, with hundreds of fintech companies serving every niche across the market coming into the market within the next decade. And that you'll see open APIs, more payment services, more wallets, literally everything that you can see that you feel that there is a need for will increase, will come into the market in the coming decade. And that's what having funding does. It helps you grow into a growing market.
Absolutely. And, I have a follow-up question. Do you see some of the countries within the region faring better than the others? So let's say countries such as Saudi Arabia, countries such as UAE.
I'm looking at the region as a whole. I see the whole region sort of, especially the GCC region, really sort of growing substantially. And why do I feel that way? Because countries like Saudi Arabia, the UAE, Bahrain, they all, and in Qatar, they all have now not just regulation, but they're actually actively looking into how to couple innovation with regulation, right? So, and that in itself, certainty around regulation allows for markets to grow. So that's one. Funding allows markets to grow. Success in certain markets allows other companies to also enter the market, right? Because you're seeing success. So why do I feel the GCC is well set to do this? Because we're seeing companies, especially fintech companies, that are actually succeeding in all of the countries in this region.
Arvind, I'm going to turn to you now and get your views on whether you see this kind of interest on behalf of VC firms continuing sort of investing into the sector when the overall climate seems to be a little difficult and challenged right now.
So VCs will continue to invest in fintechs where they see a value proposition which is unique, which is solving a specific problem. Okay, if you look at likes of Kareem, which started in UAE, right? So that's given birth to that, and how successful that venture has become, where it has gone international as well, right? And ultimately getting the VCs, the companies will get on to a listing mode as well on their own, right? So from a point of view of investment, yes, we see a strong proposition considering that the government itself is promoting these. There are lots of fintech hives which are there for fostering these innovative ideas. They're setting up labs, which gives the opportunities for people to come across from different parts of the world to explore the opportunities and showcase their unique proposition which is there and which sort of attracts funding in return on that. So a lot is being done. It's not just about just the ability or capability of individual. They also need to have the right kind of environment and atmosphere and infrastructure for them to thrive and explore and experiment. So if you look at Sharjah, they have an innovation hub where they are talking about air taxis and stuff like that. If you look at Dubai High Fintech next to DIFC, so they have one entire lab, and banks themselves are also promoting these kind of activities where you come up with the innovative ideas, you give a prototype solution, put up a business case, and banks are willing to fund those as well or get into a partnership with them to fund those initiatives, which are sort of solving a specific use case, and at the same time giving them a platform in a larger geography or larger scale for them to see whether it actually works or not.
So insightful, so nice to hear. And collaboration seems to be a theme for the episode, which makes me incredibly happy. Um, Padmini, may I move over to you and tackle this point? So Arvind just spoke about how the region is progressing, how different entities are emerging to solve a problem, to provide solutions. We've seen that the regional fintech sandboxes, the number of these centers, how they have increased. There were 4 such sandboxes in 2019, which has now increased to, if I'm not mistaken, 11. And this number is set to grow. What do you see this translating for the fintech landscape? Do you see it getting stronger, more competitive, yet sustainable?
I do. So, innovation is not going to be able to thrive without that sort of systematic regulatory support, right? The UAE, I think, is an amazing example of this. They established fintech adoption and growth as their central national priority, shaping the path for greater innovation and strengthening actually the ecosystem. They've got a UAE fintech office. They've got a national AI strategy for 2031. They have national innovation strategy, right? So, and that will help the market sort of grow itself. Um, in in terms of the 11 sandboxes, the DIFC has one and ADGM have one. And that actually means that they are thinking about how to support fintech innovation as well as fintech growth and certainty. The thing will be to actually look at how these multiple sandboxes sort of work together to bring more cohesive policy through the region, right? So to continue that growth.
Sure, couldn't agree more. And looking towards the future, let's say in the near term, what is that one development that you are super excited about?
I'm excited about us. We have, given that the region we're in, we were inspired by the events of COVID and the customers we were serving to build something, to build the ability to put financial product creation into the hands of individuals, allowing people to create and distribute financial propositions through Share, just like Airbnb did with allowing anyone to be a hospitality provider, or Uber did with allowing anyone to be a transport provider. And see, one of the things that hasn't happened is just that being able to provide the sort of income earner to allow their dependents to spend from them. So I'm really excited about Share. I'm excited about the growth that we've had, the fact that we leverage trust networks, right? Your family is those who you trust more than anyone else. And leveraging those trust networks to help us to grow and help the users themselves to grow.
Amazing. Arvind, we have seen that banking looks much different from what it used to be 5 years ago. Uh, Accelerated tremendously during COVID. If you could tell us, what do you expect future of banking to look like?
Banks should disappear. Okay, disappear from the front line, disappear from a customer's point of view. Banks is only as a service which should be there, and the customer should be focusing more on what they need to do, more to focus more on business. So all this sort of leads essentially towards experience, right? A product can be copied by anyone. So if you take out one innovative product proposition within the bank, it's not very difficult to replicate that. The bank can easily replicate. But what is difficult to replicate and sustain is the service aspect of it. Okay, is what the experience is having, and that's the biggest shift which we are seeing happening with the help of uh, fintechs who help us solve the specific problem, right? Like at the beginning, I mentioned that when we have partnerships with, say, an accounting firm, right? So the customer is focused more on doing his business on the platform which he chooses, and bank becomes as a supporting role in the background, and that's the direction which we see more on the experience, more or service oriented. At the end of the day, it's service industry, right? So that's where the shift would be, to ensure that you have a fairer share of the wallet. You have a better marketing by word of mouth rather than having to put big hoardings. So those are going to differentiator, and of course, collaborating with the fintechs, they make it a lot more easier from a customer point of view to interact with the banks.
Sure, easy, seamless, of course, but we also see strengthening of the sustainability agenda. We see that companies are genuinely paying more attention to carbon statements. And how does that whole dialogue play into the banking segment?
I think ESG is a very important aspect when you look at the future which we want to, the kind of world we want to leave for the future generations to come. And there is a lot more focus on how green the companies, or how better the governance of the companies, are they economic, eco-friendly kind of companies. And there is uh, a weighted push, not only from the company's outlook, but also from a financial aspect, because sustainability is the biggest factor which is going to come in. And super governance, good governance is another aspect which one looks at from a society point of view. So that's an important aspect. There's a big shift as to get that into the mechanics of, from a lending point of view, or from opening a bank account point of view, or a fintech where you want to partner with. So that's an important aspect which is taking focus on these days.
And that's a wrap. Thank you so much, Arvind and Padmini, for joining me on today's show. It has been incredible and very, very insightful. Thank you so much for sharing such brilliant views about the industry and your respective businesses.
Thank you. I think platforms like these, help promote the fintechs, and of course good governance which are there, and gives an opportunity for a wider audience outside to leverage on what is happening in the market in a good way. So thank you very much for the opportunity.
Thank you as well. I really enjoyed being part of it, and love the engaging questions, and thanks for having me on.
An absolute pleasure to have you both on today's show. A very exciting journey that we've scaled over the past year. Thank you once again to our audience for being part of our journey. We do ask you once again to share your thoughts, feedback, and questions on our LinkedIn page. If you have a transformative story, do share with us and get featured in our Did You Know segment. Of course, this show wouldn't have been possible without the support of Team DisruptX, spearheaded by Upasana Barua. It's a wrap, but I'm not leaving just yet. I've got an exciting announcement to make. After hosting some really interesting and insightful episodes on DisruptX and completing our 12-month journey, we are launching a brand new format, up close and exclusive, which will be hosted by our wonderful colleague, Brooke Hall. Welcome to DisruptX, Brooke. Can you tell us a little bit about up close and exclusive? What can our audience expect?
Thank you, Gupta. I'm thrilled to be here today to tell you about DisruptX's new video podcast series, Up Close and Exclusive. This is a fantastic opportunity for our audience to learn about the personal journeys and viewpoints of leading business executives. The format will be a cool and intimate fireside style setting as our guests share anecdotes and experiences, as well as discuss the impact of technology in their industries. I'm so excited to be sharing with our audience inspiring conversations and influential stories with our new video podcast series, Up Close and Exclusive. So stay tuned.
That sounds really exciting. So, to our audience, do watch out for more announcements on Up Close and Exclusive. Until our next episode of DisruptX, stay well and take care. See you in 2023.